And we're live.
Good morning.
Hey, how's it going, everybody? How you doing today, Bobby?
Doing well. How you doing today, Ed?
Good. All right. Today's show is 101.4. Today we're going to be talking about closing costs, and what we want you to know is what are some of the normal closing costs, and we'll kind of give an estimate what you can think about on a $400,000 purchase price, what those closing costs might be. But again, it's going to be different by where you live, county-wise, statewide, the whole nine yards. So we're just going to kind of give an estimate.
Yeah.
We're not going to get really into prepaids, which is your setting up an impound account, that kind of stuff today. We can get in that a different time. So I'm going to move Bobby over here and ask away. Let me get a little bit closer so I don't feel so small next to you.
Yeah. So since this is on the backside, or I don't want to say on the backside, but towards the end of a transaction, you start thinking about closing costs because obviously you're going to have prorations for insurance, things like that, right?
Yes.
So the first thing people think about is, hey, I'm doing FHA. I need 3.5% down. But one of the things that kind of gets overlooked is what are the closing costs going to be. So that's why I wanted to go over that today, because obviously there's additional fees for that. So what are some of the main ones you see from the lender side?
All right, so let's back up a second. So if you're dealing with a good lender, right, the moment you talk to them and they're qualifying you and going through the process, make sure you can buy the house, they're going to talk to you about closing costs, your part. So when you get into a transaction, you negotiate on your side. You help the client negotiate what they pay in closing costs, right, by county, like whether they pay half of the escrow fee, half of the buyer owner's title policy, half of those. That's what you guys negotiate. But we kind of talk to the buyer ahead of time and say, okay, this is kind of what your numbers are going to be, so that you have that money set aside also besides your down payment. Because it's really important to have that money. Because before you could ask the seller to help you with closing costs or add it to the purchase price. I have one right now where they negotiated a price and now they're coming back and they're going to add their closing costs to the purchase price and get that from the seller. Are you following me here? So basically they're adding $6,000 to the purchase price to get the $6,000 so that they can have that money towards their closing costs. And it's a lot of, I don't expect everybody to understand what we're talking about today. So please, after this, reach out to us, ask us more questions. You can direct message us. We can set up a phone call, whatever we need to do to get this explained properly, because it goes over, because there's a lot of, by area, it could be different closing costs. And one of the things, so basically everybody, when you on the loan side, right, when you look at this thing that we send out called a loan estimate, right, and I'm going to give a sample real quick. I'm going to share a screen. All right. Sorry, I've got this new slide thing today. Hopefully there's no name. Nope. All right. All right. So if you look here, this is origination cost, right, in this box right here. This is where the lenders make their money, whether they have an underwriting fee, processing fee, application fee, and then any cost for origination or discount points for buying the rate down. If it's buying the rate down, it's going to say discount points. Okay. In this area here, you're going to have services that you can shop for. That's what they say. Appraisals, basically we pick different appraisal management companies. And this appraisal fee can be anywhere from $495 to $700 to whatever, depending on what are you buying. Okay, if it's a purchase, refinance, what you're trying to do. The credit report is a pass-through. So basically, if it's $22 or if it's $65 by the time you're said and done, that's all it's going to be. You're going to have flood cert on average and tax service. Okay, so these right in here are lender specific. Are you following me here?
Oh yeah.
From here on, everything else on here is related to escrow and title, and then that's separate from the real estate transaction. So this is a refinance, so it's not going to have both on here, but under title, you're going to have a settlement or closing fee, which is can be called escrow fee. Then you're going to have a lender's coverage, same on a refinance and a purchase. The only difference is further down on this other side, you should see an owner's title policy that you possibly have to pay for. Those are things that come up. So when we're looking at these, and then up here you have recording fees and other taxes and transfer taxes. The transfer tax is basically usually paid by the seller depending on where you're at, but we have to disclose it on the loan estimate just because that's how it was set up when it went through Congress and all that. This part right here that talks about prepaids, we can get into another time about that, but that's your setting up your impound account and other stuff like that. We can do a whole different time on that. All right, so you want to go over. So basically, this is basically what your closing costs can be. There can be some more on here. Like I said, this was a refinance. I know you have a purchase we can't show because it has people's names.
Yeah.
But yeah, that's important not to do that. But I just kind of want to quickly show kind of what we're talking about. That first box is where you want to look at wherever you're. So if you go to one lender and you have another lender and they send you 2 loan estimates, you want to look at that first box and see the big difference in there, because that's usually what I say when we don't have any fine print, meaning that box is not going to have underwriting fees, processing fees, any of the garbage fees.
Yeah.
If we have any cost on there, it is the true cost for the rate, and that's it. There are other people out there who do the same thing, but there's other companies that have fine print on their ads that box is going to be filled with 2 points and, you know, $7,000. I just had a client yesterday send me one from somewhere else, and they're charging them almost $9,000.
Wow. That's the difference in between you and them.
Well, it's just a difference in, well, also in the rate was 2.25, where our rate's probably going to be 2.375, because I don't believe in paying all those points for the rate, because you don't normally stay there forever. And it's a waste of money, because sometimes, so what I do is I'll give different examples, and this is what everybody should do is, if I take the 2.375 with par, which means there's no cost for the rate, and then I look at what's 2.25 cost. If that's 2-point cost and it costs $6,000, but you only save $40, take $6,000 divided by 40. How long is it going to take you to pay yourself back? It's going to take forever to get that savings. So it's not worth it. Now, on the escrow and title fees that we were talking about, that is part of this process. I always tell people on a $400,000 loan, or purchase price, I should say, figure that you're going to have between $3,000 to $3,500 just with escrow and title fees, not counting any lender fees, depending on the lender you use, but just figure the escrow and title fees, because we won't know until we get the contract which escrow or title company you're using, and then they'll disclose their fees to us. Yeah. Every company has a different fee. Every company has a different price. So it's really difficult for us to estimate it up front, but we do the best we can, right? We kind of give a quick estimate. And then we talk about prepaids. Prepaids is that other section that we should do a whole different thing on, because that's totally different. That's not closing costs. If you impound the loan, that means taxes, insurance in the loan, and your payment, that's when that comes into play. If you don't impound, you won't even see them.
Yeah.
But you need to know there is closing costs on every transaction. You'll hear the people out there say, oh, we do no closing cost loans. That just means they give you a little bit higher rate and pay it out of the rebate. They cover it for you. So you're paying it in your rate, right? Yeah. Now let's go. I kind of briefly talked about this in the beginning of this about I have some people who negotiated a price on a purchase. There's room still in there for the value to, and this is not the case everywhere, but sometimes it works. And they're raising the purchase price by $6,000 so they can get that money towards their closing costs, which sometimes what they used to do is go write an offer for, say the example, $400,000, right? And then they would add, say, $4,005 towards, $405,000. Hello. What do you think today? My first day. Towards, so that's what they're writing the offer for, and then they want $5,000 back towards closing. The problem is they come back and they say, well, we want 405, and we're not going to give you anything for closing, right? So a lot of people are negotiating upfront the price, and then coming back with an addendum saying we're going to raise the sales price to this so we can get the closing costs. Yeah. And a lot of people go, why do you want to do that? Well, it's a benefit to the seller because they're still netting the same amount, so they can write off the closing costs. The buyer gets to not come out of pocket for those closing costs. And on average, if maybe, $5,000 probably raise your payment by $15 to $20, depending on the size of the loan. If it's a $900,000 loan, it's different, of course. Yeah. But on average, so that's important to know. There's ways to get your closing costs covered, because a lot of people can save for a down payment, or a lot of people think 20. We don't need 20 of these. We only need 3%, or if you're buying USDA, no money, VA, no money, FHA, 3.5, and then 3% conventional is the minimum. So you can get in, and a lot of people can get that gifted. Because I saw a meme from somebody that said, Dave Ramsey, I spent this whole time this last year saving 20% like he told me, and my friend just bought a house a year ago with 3% down and made $100,000, right? It's not always going to be that way, but you need to make sure you can qualify. And that's why I say, we were reading the thing about, they say, go to a real estate, look at your credit, all that kind of stuff. First thing you should do, talk to an agent so they can refer you to a good lender that they work with, or contact somebody like myself, and we can go through the process and then get you a really good real estate agent.
Yeah, well, and just like lenders, for folks who maybe their first time, there are good lenders, and there's lenders out there that are going to add fees in there that are really just add a profit to them. Just like there's different agents that may be more knowledgeable in certain fields that are going to be a better fit for you. So if you have an agent that you trust and they have lenders they can refer you to, that's always the best way to work.
Yeah, or I always tell people, find somebody who just went through the process, ask them how the transaction was with that person, and if they say it was amazing, then that's, contact those people, or contact me. Of course, I'm not going to turn you away. I can always use additional transactions to go through, and because we always have room for more people. So,
well, I think in the sake of saving time and not getting into too much of the minutia, I think we kind of covered that section. I know next Tuesday we're going to be coming live again, and we're just going to continue to go over different topics that aren't normally talked about. But I want to try and give everyone a basic education on a real estate purchase. So when it comes time for you to buy your home or to sell it and buy another one, you have a little more information on what you're going to be doing as the process goes through.
And just what you should do with this knowledge from today is figure out what is your closing cost and what is the down payment you're going to need for a purchase that you want to do. So what you should do is reach out to somebody like myself or Robert, and so you can get that stuff and get that information for you, so you can get on the process of buying a home, because everybody needs to own the home. Because if you don't buy today and you wait 10 to 15 years, you're never going to be able to buy. And I think our next things, we were going to talk about occupying your home, and if there's any period of time that you need to be in a home before you can move or whatever, and we'll get into all that next time. And I think, or maybe we should look at prepaids next week and then do that the following week.
Okay.
We'll let you know. We'll surprise you.
Okay.
All right. All right. Thanks for watching. The people who are watching, if you're watching this after, just let us know. Put a little, thing in the comment in the bottom, whether you like it or not. If you do, just follow us. And again, thanks for being here today, Bobby.
Hey, I appreciate it.
All right.
You have a good day.
Have a great day.
You too.